Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com.
Peter Grandich has often referred to gold and silver as the Rodney Dangerfields of investments. They get absolutely no respect, but one of these days they're going to get more respect than they ever wanted, and at that point your opportunity to buy at depressed prices will be long past. How are you, Peter?
Oh, very good, Gary. Thanks for having me back.
Always a pleasure. So we're looking at here, it's October 15th, middle of the month, and they're doing what they do best with gold and silver, which is a bit of a raid. Gold's down around $17 the ounce. Silver's down around 70 cents an ounce. And when will they let up? When will this stop happening?
Well, it hasn't stopped for 10 years, so I don't expect it to stop anytime soon. I think it's part of the normal duration of how gold has risen. If you think about it, I've been in and around this thing for almost 30 years. I've never seen anything that could rise for 10 years, have so little respect, so, excuse the pun, panned on by so many people, and continuously see these very short windows where the market sells off sharply, which basically wipes out the excess speculative nature of it, and then it renews its climb. And this is just one of them. And I don't know whether it's number 89 or 889 time that this has happened, but, I believe there's going to be more of this. But it's something that hopefully by now long-term core holders have come accustomed to, and those who look to continuously use these as opportunities to add to their positions.
Oh, for sure. No question about it. And if you've been in it as long as you and I have, you just kind of say, oh, they're doing it again. And, if you want it as an opportunity to add to the core, great. Otherwise, you just kind of ignore it and just go on with your day and, think of something fun to do.
One of the things that's difficult for people, and this is actually for the first time in many months been able to say this, is that one of the reasons that normally triggers more retail-oriented disenchantment whenever you have these raids is because most of, and on the smaller side retail investors, most of them own mining shares. And normally what happens when these raids have occurred in the past, the shares get whacked. However, and one of the reasons why, earlier today I suggested to my readers that, whatever correction consolidation this is, it's over, and get ready for the renewed rise, is because the shares not only were not getting whacked, but throughout the day, things like the XAU and others have made a gradual rebound. And normally what happens is these things get heavily sold during those raids. So I think all in all, as we speak here, I can't say it's 100% certain because nothing is certain except death and taxes, and that gold and silver will go higher over time. But I do think that this is just, it's the pattern. It's the way it works. When people don't understand that the paper market, unfortunately, still equals or surpasses the physical market in terms of getting everybody's attention. And this is a paper raid. It's the umpteenth one, and it won't be the last. But we always, again, have to remember that what we felt like during all those other raids and what was the end result of this.
Yeah, and they've been doing it, like you said, for the past 10 years, all the way from $250 up to $1,900, and then it gets a little out of hand. Then they come and hit it really hard, drive it down, consolidate it for a year. Maybe it does that on its own to some extent, and they merely exacerbate a correction that was already forming. It's not like they're single-handedly controlling the market. I think that they're causing gyrations more so in one direction or the other to occur than would normally occur in the manipulative efforts here, were this in fact a truly free market.
Yeah, and I guess the one frustrating thing, and I've heard it from some friends who called me today, again, what do you think? What do you think? Is they go in the media, and who is they calling upon of why this is happening? But the very people that have been constantly wrong time in and time again. And even more frustrating is they never ask them, well, listen, before you tell us why it's down now, at least tell us what went wrong last time when you said it was going to go down and now it's a couple $100 higher. And I guess that's the single most frustrating part, even for me at times, because, I'm called upon by people to answer, even though being on the right side for almost 10 years, and I watch these people, that just constantly wrong. And then when the market's down, that's who the so-called media goes to get the latest explanation on why it's down. And so, outside of that, again, there's been a guiding light. Jim Sinclair tries to tell people at this time, you got to turn off your quote machine, go out for a walk, do something. Nothing has changed in the general fundamentals going forward. And, nothing, in my opinion, has changed other than that corrects the excess. And now the good news is by wiping out the speculators, on the paper market, chasing them away, now I think we got the necessary ingredients now to take a stab at getting to a new high this year. I still feel it'll be next year, but I think this correction actually set the stage to give us a better shot for a spike up to get past the highs from last year and, get near that 2,000 price before year's end. So I know I only got maybe 8 to 10 weeks of real trading left, but I think the conditions have been made now to allow us to take a run at 2,000 on gold.
And it's interesting. You raised a point, and I'm going to make a parallel. I'm going to draw a parallel. The same people who have said don't buy gold, and they've been wrong consistently, but at a few moments here and there, they've been correct based on the short-term numbers. Well, it's just like the people in the government who said buy houses, invest in real estate. Houses always appreciate in value. It's the best investment that you can make. And they've been wrong. And where are those people? They're still working for the banks. They're still working for the government. And they're still giving bad advice. A lot of them telling you not to buy gold, that stocks are where you need to be.
Well, the thing, you never get to, I try to force these people, even by offering willing to wager them large sums of money on certain numbers to be hit. But the thing we can never get anybody from the so-called perma-bear side to talk about is to explain now for 10 years on how it went up. I mean, we have to explain every time it's a little bit off from where it was just a couple weeks ago, but they never have to explain how it's risen, hundreds, if not, $1,000 or more. There's a gentleman, obviously, that I have respect for, who's been wrong for quite something. I use gentleman. The other guy's not a gentleman, so
sure.
Don't get confused. I heard your little laugh today.
I know who you mean. I know who you mean.
But there's been a man who I think handles himself in a very nice manner. He's been wrong for quite some time. South African descent, lives up in Canada. That might help a lot of people. But I respect his opinion because he gives it. He's not arrogant. He's not. But he has argued for a long time, wherever the gold price is, it's really only worth hundreds of dollars less than that. And the question never asked these folks, even this man who I have respect for, is, well, you said this now for X, Y. At least explain what went wrong with your assessment before you tell me why this time it should work. And that is never called upon. And yet those of us who have ridden the rise, seen, 1,000%, gains at times, we have to, every time there's a 5% or 10% correction, we have to explain, well, why is this happening? And, in some sense, I guess as long as that continues, we should continue to see the same results. But it does get a little frustrating at times. The emails pick up, the calls pick up, and then, the inevitable rally comes and we go to other highs. And then the only emails you get is, well, how far you think it can go now, Mr. Grandich?
Should I sell? Should I sell?
Or should I sell? Those types of things. But that just comes with the territory, the hate mail, and all that other stuff. But I do think that everything that has driven, and this is what, Jim Sinclair's right. In one instance, you should turn off your computer. But in the other, you should say to yourself, listen, this is what I believed drove the market to such and such a point, okay? Has any of that realistically changed? And then I think just take a minute or two so we remember what I think got us here, what these guys don't owe up to. And I go back to it, and I really think it's why they missed the entire move. Gold used to be very, very available for sale because central banks were big, big sellers of it. And then the Washington Accord took place, and they began to sell their gold in a more orderly fashion. And in the last few years got to the point where they really didn't even make any more sales and became net buyers. So one of the big stigmas that used to be very bearish for gold made a 180-degree turn to central banks. The second thing that changed was throughout the 90s, gold companies, the old American Barrick, now known as Barrick Gold, sometimes was more of a commodity trading house than a gold producer because they used all sorts of derivatives and other strategies that sold gold forward in order to get a better price than the average common price. And it was very common for gold producers to sell gold forward. Now it's a four-letter word, so that made 180 degrees change. And then the ETFs. And they're a group in the hard asset camp that don't like the ETFs. They don't believe it's actual ownership and all. And that may or may not be true. But one thing undeniably it did, it gave access for large institutional and large players to have gold in their portfolio without the encumbersomness of actually physically buying the gold, tracking it almost to 100% correlation, and most important to them in their regard, gave them great liquidity that they used to try to find in mining shares, but they never could be satisfied there. And so while it was somewhat detrimental to the mining share end of the business, it also changed the supply and demand scenario of the gold. And then the last ingredient, the change that has been happening worldwide for several years and has been greatly increased in recent times, is governments are creating more and more paper money, debasing their currencies, racing against each other, who can debase it the fastest in hopes of saving their economy. And I have to tell you something, none of that's changed between now and 2 and 3 weeks ago when gold might have been $40 or $50 higher. So if you purchase gold, and I don't mean you personally, but anybody listening to this, if you bought gold and you just believed in everything I said as reasons for why it got there, none of those things have even begun to change. Now, if they started to change, if we started to see central bank selling, if we saw a dramatic pickup in producers selling forward, we saw ETFs start to see large net liquidations, even though we just continue to see more and more ownership of them, and for whatever reasons government started to tighten in interest rates dramatically, then we can pay serious cause and mind to what may be unfolding in gold. But none of that has changed, and that's why, other than the day-to-day swings and the raids and how some of us believe the market has been manipulated at times, will continue. And so you just got, like Jimmy says at times, sometimes you just got to turn off the quote machine.
Yeah, I am in complete agreement with that. And you know what? If that person you're referring to is at the Silver Summit, I'll try to buttonhole them and ask them that question. Like, you've been wrong all this time, other than in minor down periods, intermediate, spikes down. Why should we believe that you're right now? That is the ultimate question, and that's one that really deserves an answer, but somebody's got to get in there to ask it.
Well, I wish you best wishes on it. It's something that every time I've ever known, in particular certain parties, they duck it, they avoid it, and but wish you well. But even if you get the answer, I presume your answer will not be a real answer, because it's very difficult to perform the Ponzi maneuver. The Ponzi maneuver is one of the most difficult maneuvers on Wall Street. You very rarely see it enacted when somebody's able to say, I was wrong. And the problem with that is it'll always be that way. But again, just to sum up, I really think what we've seen is just another consolidated minor correction. None of the general fundamentals have changed. and when this little bear raid is over, we'll be talking about an $1,800 and something gold price.
No doubt. And I thought you were going to refer to the time when the Fonz was on the surfboard and jumped the shark, which became a lexicon for you kind of shot your load and you're finished and it's all over. Because right after that episode with the Fonz jumping the shark, the the show pretty much died an inglorious death. So, but I know what you're saying, and the fact is that it's just like you talk to people that go to the casino. How'd you do? Oh, not too bad. But when they win, they're telling you, oh, I did so good. When they're losing, you never hear a peep out of them. And I think that's the way these people are. Whereas you and I, we have to be honest because we're effectively contrarians. And if you're a dishonest contrarian, man, you lose credibility so quickly that everyone turns you off.
Oh, it's true.
So contrarians have to be honest by their nature. And, I think that's the takeaway from all this. And Peter, hey, Grandich.com newsletter every day. It's free. I get it. I look at it and I highly recommend it.
Thank you very much.
All right. We'll talk to you soon. You be well.
Bye, buddy. Thanks.
Bye.